Hey all, welcome to Share Trek. This is Raj here, friends. I have a big announcement to make. This Sunday, I'm going to have a Zoom happy hour with our members, and the objective will be to do anything that we want to do. Talk about the stocks, talk about the economy, do some technical analysis on demand, and then we'll see how it goes. So I'd like to see you there if you have the time, and if we can get a sufficient number of our members for this meeting, I could even consider making this on a more of a regular feature, so that there'll be some added value, and also I'll get to know you guys better. I have always been talking into the camera. For a change, I would like to have interactive conversations, and that'll give me also a chance to know you better and understand the market much better from your point of view. With that, friends, today I'm going to talk to you about two companies that are very much in my sights. So that is Amazon and Meta. And you'll say, Raj, this is Genomic Channel. Why are you talking about Amazon and Meta? There are two reasons. First is that we have also included artificial intelligence into our area of oversight, and Amazon and Meta get into that area as well. And the other reason is that our genomic sector, our watch list, doesn't have any news at this point of time. Nothing major is coming up. So instead of just whiling the time away, I think we should look at opportunities elsewhere in any hot sector. Right now, AI is very hot, and cloud is also hot. These two companies are in both, and we should look at them. So that said, let's get started. Welcome back, friends. Let's talk about the market today and why, despite the ups and downs, companies like Meta and Amazon are still going to be in a position to thrive. Today, we are seeing the usual big tech names nudging the market upwards. It almost seemed like the good old days when Mag 7 could be counted on to lift the market and keep on pushing it upwards, setting the stage for what could be a very eventful day tomorrow, especially with the highly anticipated March jobs report on the horizon. Today's weekly jobless claims data came in higher than expected, hitting the highest level since January. This helps the case for rate cuts. And that's the reason why we saw the markets jump up. That's why we saw the Mag 7 pushing things up. Things have cooled down a little bit since then. I'm recording at around 3 o'clock in the afternoon. So we'll see how the day ends. But tomorrow we have non-farm payrolls and unemployment rate data release at around 8:30 a.m. In tomorrow's highly anticipated jobs report, economists are expecting 215,000 jobs were added in the month, and the unemployment rate to drop to 3.8%. Also, we'll have option expiry because it's going to be Friday. So it will be a very interesting day indeed. Now, amidst all this market chatter, let's zero in on Meta and Amazon. These two tech giants are showing resilience and promise, in my opinion. Even if the broader Mag 7 may not be as intact as before, I think these two companies are likely to do better. Take Amazon, for example. The e-commerce company is experiencing renewed positivity in the market. They have been cutting costs. And those of you who see my daily market updates at the end of the day, you know that Amazon is effortlessly riding a bull channel, and it doesn't show any signs of coming down below that channel. So that's, again, from a technical perspective, also very much supporting the view that Amazon is going to do pretty well. Despite today's jobless claims data throwing a bit of a curveball, Amazon stock is still seeing a 1.1% raise, inching closer to its all-time high. Sure, there are reports of cost-cutting measures like trimming its cloud computing workforce, but all those things, I believe, are going to add to its bottom line and increase the productivity and hence add to the value of the company. Amazon's record valuation of 1.89 trillion speaks volumes about its strength and potential for growth. And then we have Meta. Just a few days ago, the Canadian government struck a deal with Meta, and this signals a significant shift in the regulatory landscape. And friends, you have to read this particular agreement and the declaration that goes with it in order to understand what a strong position Meta is in. The agreement acknowledges past missteps and aims for more effective solutions moving forward. On top of that, investment firms like Jefferies are bullish on Meta's prospects, raising its price target and citing its competitive advantage in the digital ad market, especially as it integrates AI tools with its WhatsApp commercial usage on the rise. Meta is poised for some serious growth. And the Canadian government has actually acknowledged that they were not thinking properly when they decided to bring Bill C-18, and they have apologized for that, and they've also realized that a lot of well-paying journalist jobs was lost in the process. So Canadian government has changed course. This all means that Meta is on a much stronger wicket at this point of time. So what does this mean? What does all of this mean in the grand scheme of things? Well, even if the broader market, including Magnificent Seven, sees some fluctuations, companies like Meta and Amazon still have compelling stories driving their gains. Their strong fundamentals, innovative strategies, and adaptability to market changes, as well as constantly improving their productivity, positions them for success in the long run. And on top of that, Meta is integrating AI tools, and it's expected to boost its marketing revenue significantly as a result. So that's going to be another big factor in favor of Meta. Remember, folks, the market can be unpredictable, but companies with solid foundation and clear visions are the ones to watch. And as always, this is my personal take, not financial advice. So please do your own due diligence. I am thinking that while we have downtime in the genomics sector without any new developments, we should think outside the box and look on what's happening in other sectors and seize some opportunities here and there. It doesn't matter where you make your profits. It's not compulsory that you make all your profits and your losses only in genomic sectors. You can make profits and losses in other sectors as well. So that's the theme of today's video. So let me know, what are your thoughts on Meta and Amazon's prospects? Do you have any of their stocks in your portfolio? Let me know in the comments below. Also, this Sunday, I plan to have a members only Zoom happy hour. So I want to remind you about that. And the agenda is to discuss anything that you guys want to discuss. And I'll also do some technical analysis on if any of you request me to do on any company. And I would like to see how many of you are able to join me. And if I have a good enough quorum, I think I could make this a regular feature for the members. That's all for now. I'll be back to you with the next video, maybe later today. Of course, I'll be doing the daily update video for the market, and then again tomorrow. So with that, my friends, I'd like to say bye for now. I'll catch up with you again in the next video. See you later.